So yeah, the headlines today were dominated by one word, and out of all of the words in the language, the word just happens to be layoffs. Amazon just announced it's laying off up to 30,000 corporate jobs starting as early as tomorrow on Tuesday. And this is one of the largest workforce reductions in years, and it's really turning heads for what it might signal about the broader economy. Let's talk about it. So, Amazon says this is about efficiency. It's trimming pandemic era, overhiring, rebalancing across divisions like HR, cloud, advertising. But let's be honest here. This is about cash conservation. It's about margin protection in this slowing environment because when a company like Amazon, sitting on hundreds of billions in revenue, starts cutting this deep into its corporate ranks, it's not about survival. It's more about how it's bracing for weaker growth and what that could forecast about the economy ahead. And that's exactly why recession watchers are paying close attention to what's going on right now. So the labor market is usually the last domino to fall in, let's say, a slowdown period. So when one of the world's largest, biggest employers begins trimming its highest paid white collar jobs, the signal isn't subtle. It says we've hit this top in the labor cycle. Hiring is cooling, wages are plateauing, and corporations are shifting from expansion mode to more so this defensive strategy, if you will. And what's really interesting though, that this isn't showing up in the unemployment data yet, partially because the government's still shut down and that data isn't being released on time. But private trackers, from layoffs to job postings, they're not flashing red, but they're starting to flash like that yield color, the yellow, like, hey, let's pay attention here, y'all. It ain't red yet, but just watch. And this job market, it's not collapsing, but it's definitely losing heat right now. So this is where there's the twist. What we've seen in stocks today is that, well, they didn't flinch. Even with Wall Street's layoffs making headlines, the Dow rose 0.7%, the S&P 500 added 1.2%, the Nasdaq slumped 1.9%, notching its first back-to-back 1% gains since May. And before we talk about what's really driving these headlines, because I doubt it's Amazon, if we come to this bottom chart down here, we type in BTC USD and look at what Bitcoin's doing, which some people watch Bitcoin just to kind of forecast where markets could potentially go. Yes, while it shot up to as high as 116,000 and some change today, it has kind of been trending down, and it's down 0.7% on the day, which could be a bad omen for the markets. A lot of people watch Bitcoin as kind of like this proxy as to where we could possibly heading as this risk trade unravels. But I mean, today the stock market's completely killed it. And what gives? Well, I bet you could imagine where we're about to go here. The simple answer here would be optimism, mainly along the side of trade optimism and everything going on with that. So President Trump is now widely expected to finalize a new trade deal with China pretty soon, as far as this week, and that's really injecting this fresh optimism across the market. Treasury Secretary Scott Bessent called it a very successful framework and said both sides, both the US and China, have reached this preliminary consensus ahead of Thursday's Trump and Xi Jinping's meeting in South Korea. That's when the deal is expected to be formally announced. Now, don't get your hopes up. This could just kind of be like them announcing the deal before it's officially in place to kind of like corner the other side. Now, the deal includes several key elements that a lot of people are expected to love now. So the 100% tariff threat, that could officially be off of the table, but you never know. could, like, blink of an eye, be back just like it never left. China is expected to delay the rare earth export restrictions that a lot of people were expecting to come out of this, which is a huge relief for the tech sector. And probably the most politically symbolic is that China's agreed to resume major soybean purchases from U.S. farmers. And Treasury Secretary Scott Bessent even hinted that China will help the U.S. in the fentanyl crisis, which could lead to a rollback of the 20% tariffs tied to that issue. So less is better in this case, and for markets, that all adds up to one single thing, and that's most likely why we've seen the jump we did in markets. With, I mean, if you look at that top right chart like that, like all of them pretty much look like that. Like it was like skipping a rock but upwards. And it's less uncertainty. And when uncertainty drops, which you see that VIX right there, the market's gauge for the S&P 500, the volatility index, that uncertainty's really been trending down over the past few trading sessions. And that's why tech led the rally today, because with the NASDAQ closing near record highs, I mean, people are pretty happy with how things are going. When uncertainty drops, valuations expand. And when valuations expand, people make money. It's a good time out there, everybody. What's there not to be happy about? But, y'all, there's a but. And well, the but here is timing. And it couldn't be more crucial, because while a lot of people are celebrating the trade progress, they're also staring down the Federal Reserve's next meeting Wednesday. So Tuesday is a big day. And then Wednesday, we get the Fed. So Tuesday, the Amazon layoffs. Sometime during this week, who knows when that could be, some potential deal could be announced. We got some over the weekend and today. But Wednesday we get the Fed, and this will be the first Fed meeting since the government shutdown began, and all eyes are going to be on whether policymakers will move ahead with this quarter point rate cut that's widely expected right now. October 29th, yeah, markets are thinking there's this 97.3% chance of a 25 basis point cut. And then as far as December 10th, it seems like we're still on track for another 25 basis point rate cut in December 10th's Fed meeting. So the Fed's in this tricky position right now. Inflation's cooling, not enough to declare victory. In the job market, well, we've been seeing a lot of headlines lately about layoffs, and then forever it's been a low hiring, low firing point of view. But now the firings are starting to come in place, and with the government shutdowns and all those furloughs, yeah, some were blocked. There's this pinch in the job market. Like I said, it's softening, but not to a point that it's time to panic. So pretty much what they say is Wednesday could set the tone for the rest of the year. So that's why a lot of people's watching Wednesday in particular, because a lot of these moving pieces, yeah, like we could get a trade deal. Yeah, companies start laying off. What really everybody's been wanting before any of this other stuff's came up is the Fed to cut rates and continue easing. So yeah, that 25 basis point rate cut is expected to happen, and it'll reinforce the narrative that the Fed is easing just in time to cushion this slowdown that we're potentially heading into in the winter. I guess that's when the business cycle kind of like, or the economic cycle. But if they hint at potentially pausing and using language that's more hawkish, meaning they're not sure about another rate cut, even if they're capping about it or lying. I get to using lingo over here, using slang. If they start talking about like, well, we don't know if we're still on track, we need more data before we consider cutting in December, and that potentially moving these markets' expectations of a cut, that could test this rally, and it could test it really fast with how extended or rich the market is trading right now. But between Amazon's layoffs and the Trump and Xi Jinping's meeting and the Fed's decision this week, it'll be a perfect snapshot of this tug of war happening in the economy right now. We got corporate America tightening up, Washington is trying to loosen up, and the markets, well, they're somewhere in the middle, still climbing that wall of worry. So for now, yeah, the up direction, it's been nothing but up, and nothing goes up in a straight line. And I guess that's where we go into what the heck is going to happen next, and especially after the Fed. And that'll tell us a lot. It'll tell us whether the rally has real legs or if we're running on hope. So, hope your day is awesome. Hope you have a good one. And y'all, I hurt my neck today. So I don't know if I'll be here tomorrow, but no matter what happens, thanks for hanging out with me.